What up, what up, what up, my traders? Welcome to the SPACs attack. Yes, you made it. You made it. I hope you guys are super excited as I'm excited. Got the fresh cut, looking for some new SPACs. Got my guys in here. You guys already know the brains to the show, Chris Katje. But let's go ahead and then start up this show, and then we'll get started. We got SPAC Warrants today. It's going to be a great day, guys. Hit the like. Let's get the party started.
Oh, that old mute trick, Mitch. I was trying to get my cue there, and then I was like, I can't hear him. What's going on, everyone? Welcome to SPACs Attack. I can't hear you, Mitch. Oh, sad day, sad day. That hair's looking good. Loving the fresh cut. I heard you perfect before that intro video, and now I can't hear you, so not sure what's going on. Welcome to SPACs Attack, everyone. We've got a jam-packed show today. It's Friday. We've got an exciting guest coming up later. You guys have been asking for more coverage of SPAC warrants. We've got an expert in that field. You know him as SPAC Warrants over on Twitter. He'll be joining us in a little bit. Want to dive into those headlines first. So up first, we have SPCE, so Virgin Galactic. This one I've called out, several times. That one of the stories to watch was that the company was possibly going to be Blue Origin and Jeff Bezos to space, in this new space race. And sure enough, last night we got the announcement that Virgin Galactic will be flying on July 11th. That flight will include Sir Richard Branson, the founder of the company. And it'll be done, before the Blue Origin flight is supposed to take place on July 20th. So it looks like, if everything goes as planned, Virgin Galactic will beat Blue Origin to space as far as Richard Branson beating Jeff Bezos. Also, Virgin Galactic going to share a global live stream of this event. This is going to be a big deal for them. Obviously, there are some risks with this. We could see some buying and selling pressure. Shares of SPCE have come down today. They traded over $56 last night. And of course, earlier this week, traded over $60. And as I said, this was one to maybe take some profits in. We'd see a pullback. But then the big story to watch was this event. And, then you got your liftoff again. So, again, today, you're going to see some selling pressure. But you've got a couple catalysts coming now. You've got that flight window opening on July 11th. You've got the live streaming of it. And if it's successful, I would expect shares to move up. Keep an eye out, SPCE, exciting story to watch that we've been calling out. One of our movers today, we have GENI, Genius Sports, landing a license in the state of West Virginia. Adding to their arsenal of states that they have rights to, that they can provide that sports data to the sports betting providers. This has been a favorite of ours on the show. GENI, definitely on watch today. VWE, which recently completed their SPAC merger, Vintage Wine Estates, getting a initiation from Citigroup, a buy rating and a price target of $14. This is one I actually own some call options on. It's one where I think it's trading below its value based on the competitor, NAPA. I think we start to see that gap closed, and not surprised to see an initiation here from Citigroup and that new price target. Another SPAC to watch today, we have MYPS. So Play Studios, which recently completed a SPAC merger. News out last night that Activision Blizzard took a 11.6% stake in the company back in June prior to the de-SPACing. But last night was the first time that I saw that disclosed anywhere. This is a big deal, obviously, with Activision Blizzard being one of the largest gaming companies out there. So Play Studios went public with AC's acquisition, which is a SPAC led by Jim Murren, the former CEO and chairman of MGM Resorts International. Company has 4.2 million monthly active users that spend 56 minutes a day playing their games, over 100 million lifetime to date downloads. Revenue $269.8 million in fiscal 2020. Revenue growth expected to be 21.6% to $328 million in 2021. Another item to note with Play Studios here, MYPS, is that at that vote date, over 50% of shares were redeemed, which means it's going to have a lower float than originally planned. It will mean less money for the company going forward. But we've seen, some of these SPACs that complete the merger and then have a lower float, really gain interest. So keep an eye out, MYPS. We got a couple vote dates set yesterday. We have ACND voting on July 20th, their merger with MarketWise. And then VCVC announcing a merger vote date of July 21st with Automotive. Our deal yesterday, ISOS, merger of Bolero. Shares ending the day up marginally, 0.4%. Not a big mover. And then FST, one of the big winners yesterday, up 11% on that amended deal and additional assets included in that merger. That's what I've got for headlines. The thing I'll note on our calendar, which we recently went through that whole July calendar, we, of course, have a shortened week next week with no trading on Monday. And then the only vote that I'm seeing on our calendar is SPRQ, that merger with Sunlight Financial on July 8th. So that could be one to watch. And being the only vote next week could really give it a chance to, shine in the spotlight. So that's what I've got, Mitch. Let's see if the audio is working again. Welcome back. Welcome back. I hear you. We're good.
I'm coming in from space. I'm on the Virgin Galactic. On the Virgin Galactic, I got my man Branson right next to me.
Yeah, let's talk about these space stocks. I mean, this, Mitch, we've talked this story, right? And there's plenty of risk with Virgin Galactic, but I think the patterns have kind of been there on if you want to trade this. Every time they have the announcement of these flight windows, you see the boost, right? And then shortly after, you see a little bit of the fall and the profit taking. I mean, today's July 2nd. That flight's going to be July 11th. So we don't have a ton of time. But what do you think happens to shares, between now and July 11th? And what are, some of the, potential scenarios of Monday, July 12th, where this thing could end up?
Honestly, I have no idea, Chris. I can be honest. Sometimes you gotta call it how you know it. And right now, I have no idea on this stock. I've had it wrong the whole time, so it's hard for me to even give a statement here. And when you're wrong, you got to know you're wrong. And this one, I'm wrong, guys.
Yeah, I think the big thing for me is, and Mitch, I mean, what do you think so if they fly July 11th, that's a Sunday. My guess is that the flight is either highly successful or a big failure, which to me means that shares on Monday the 12th will either be up 15 to 20% or down 15 to 20%. I don't think there's a whole lot of middle ground there, which would almost make me want to play both sides of that trade, because I really just think this thing, I mean, on that next day is just going to have a wild move. What do you think?
I mean, it's already wild, right? I mean, what's to say that it's not going to stay wild? So that's what I would say. Definitely pay attention, guys. One of the things that I would say about this stock is that a lot of the times this stock is traded heavily in the early morning hours. If you guys see today on the 25th and kind of the other stocks, you see when they move a lot of this in that pre-market hours. And so you see right here, look, this was after hours that were really spiked up. But this is why this one really kind of moves pretty big in the pre-market and after hours. So you have to really get up early if you want to catch this one with the news, or you got to be watching after hours to really catch that news spike. I mean, even today, even when that news came out, it did give you a little bit of a couple minutes there before it gave you a huge spike. So that's why you got to definitely stay up with these. And this is a stock that releases those news consistently after hours, and then this is what happens. And then so you have to watch that for the pre-market and then the after-hour news announcement in SPCE. And with that being said, I mean, that's also a pretty volatile thing to look for. And so it's kind of hard to catch. So you have to really be on it, on top of it. One of the best ways, Benzinga Pro. But I mean, even then, you really have to be watching this stock.
Yeah, and I see WK Harris there in the chat asking, would a delayed launch keep it in the middle ground? So, that's an important thing to note. The flight window opens July 11th. That doesn't necessarily mean that the flight will be on July 11th. Whether, right. It depends on, checking the engine, all those things. I have to think that if it doesn't happen on July 11th, though, we will see shares trade down, right? Even though it may not be their fault, like the weather, you're going to see some selling pressure. The other thing, Mitch, I'm a shareholder in SPCE. I don't know if I want this test flight to happen during trading hours. I just feel like it would be just insane, right? So instead, to happen on like a Sunday, I think would give some room to do the reactionary trade the next day. I mean, if this thing happens during trading hours, it's going to be insane. I mean, we might even have to try to do a stream of that or something if it's on a
We're
trading
doing
day.
This, Chris.
So yeah, I mean, talk about a crazy day.
I'm streaming that rocket going up. I want to see that bad boy. Whether it comes up or down, I don't know what's going to happen, but we'll definitely keep a watch on it, and it's going to be interesting to watch for sure. And the race is on. I mean, it's not the only kind of space stock that has been moving. We can get into some of that a little bit later, but definitely a lot of stocks kind of moving on up there. Genie, can we get a bounce in Genie? I've been waiting for this. Finally starting to get back above 19 here, starting to hold 19. If it can hold 19, I'm in the green, guys. Yeah, definitely. You guys know, I've been jumping into this one. It's just going to keep adding stuff. So that's what I'm going to keep watching to see how they keep getting their partnerships and how that affects the price.
Yeah, definitely. Genie, I just think, is set up nicely going into the NFL season. I mean, that's the big catalyst, right? Is, NFL betting. They have that partnership with the NFL. But, another big news item today, West Virginia. I mean, we've talked about it. We had a couple of betting interviews this week, how important these state-by-state legalizations are. So it's important for a company like Genie. They have to get approval in each state as it's approved. And West Virginia secure the license, which now means all these sports betting companies in West Virginia are going to have to partner with Genius Sports. I mean, that's just a fact. That's how they make their money. That's how they get those bets out. So another strong showing today, for Genie.
Hey, I'll definitely keep watching. As you guys know, I've been averaging in this one. I'm down towards the 1850s. Was looking to see if we were going to get another dip into the 17s because I was willing to take another shot, another average down to keep coming down towards the support, hold off the monthly supports, and then look to get it right back up there towards the monthly resistance. But at least, hey, if it holds 19, I'm not going to be mad. I don't need to add into the winner. One of the things that I try not to do is really move my position size up unless I really feel like there's a catalyst that's really driving the stock. And that's a little bit different. That's kind of, you're like playing the momentum when you add that ad there. If I don't know the momentum's coming into the stock, I'll try to stick out of it and wait for it to just kind of continue laddering on up, because that's what I'm looking for. I'm looking for that bigger return on the swing trade versus just a day trade.
Yeah, perfect.
All right, let's go ahead. Let's wrap this up. Some other ones there. Any other one you want to really mention? I see GNPK up. That's not a bad looking one.
Yeah, GNPK, one of those space stocks, Redwire space infrastructure play. That's one of my favorites in the sector. And this thing's still below 1050. I think this is one that could get some sympathy with these other space stocks. It also may take until it actually completes its merger and is called, Redwire Space, for it to really get the attention as a space stock, Whereas right now you hear Genesis Park, you're not exactly jumping out, as a space company. So that could be the one to play here. Look at the Astra trade, changing over from Holicity, ASTR, looking good here.
Yeah, well, there's a couple of them that would definitely keep on watch. So we have these that will definitely look at the watch list, see how they continue to move. I mentioned in the morning to see how these were going to move with SPCE. It was interesting to see them trade up with it. So it's interesting. It's a good thing for the overall industry. I guess that's what you're seeing. All right, Chris, let's go ahead. Let's get into our favorite time when we start unlocking things in the SPAC industry. And this is really where you guys can go ahead and start asking some questions in the chat. We're going to go ahead and bring on our guest here. So like always, guys, smash the like. I want to see some love come out of the chat. Definitely show the love and let's unlock it here.
All right, guys, super excited for today's guest. Joining us on SPACs Attack, we have Jeff Baker. You know him better as @SPAC Warrants on Twitter. He's the creator of the SPAC Warrant Index that can be found at commonstockwarrants.com. Welcome to SPACs Attack, Jeff.
Hey, thanks for having me, Chris and Mitch. I appreciate it. I love your show. Love your show. Glad to be here talking about warrants.
Welcome, welcome, welcome. And like always, we always get questions about warrants. So we thought none other than let's go ahead and bring on someone that talks about warrants on a daily basis. So definitely, guys, check him out. Check him out. SPAC Warrants. You guys can see that tag right by his name right there. Definitely. Let's give him some follows, give him some love, throw some questions in the chat. And Chris, let's start knocking some questions out of our own.
All right. So before we jump into warrants, Jeff, just wondering if you can give viewers, just a brief background on yourself and maybe your trading journey here before you got into SPAC warrants.
Okay. Well, I guess my trading journey started as far back as the late 90s. I'm going to say probably 96, 97. Rode through a lot of the .com bonanza. Had quite a few entrepreneurial ideas during that period as well. So, no, I would say that's probably what started this journey. Part of my analytical process came from the boom and then bust of that cycle. So I say that I probably enter most of this with a pragmatic opinion, almost always. So somewhat pragmatic. I'm speculative by nature. I'm bullish on growth by nature, but I am also a pragmatist. We can credit a lot of that with being raised by an IRS auditor. So I'm a little more frugal than most in the speculative arena. That being said, when it comes to the SPAC warrants, originally I was just tracking mining warrants through common stock warrants and going to a lot of conferences, giving short courses on warrants, how to trade them, what to look for. And the reality was I saw some components of that analysis that I was not familiar with, things that involve geochemistry, drill results for a mining company, things of that nature, how to interpret things of like a 43101, which is their the scientific report that's got to accompany a deposit. At that point, I went to school and then graduate school for geology, economic geology, a little bit of advanced programming in there. And so from that point, we were watching our normal warrant database, tracking everything in the United States and Canada. And for a long time, the blank checks or the SPACs, they had literally just been a component. They were not the dominant piece of the equation whatsoever. In fact, they were overshadowed by pharmaceuticals, biotech, mining. And the blank checks numbered in the dozens rather than the hundreds as we see now. Sometime early last year, we started to see the influx become noticeable. Let's say, to say the least, we saw it become a noticeable factor. And from tracking warrants, how do you narrow them down? Now you're going from dozens to hundreds. So how do you try and pin any of these down to an investable security that you actually want to put your money in, because there's so many. And obviously, unless you're Warren Buffett, you can't own every single one. It's not possible.
Oh
We'd love
man.
right. We'd love to, but it's just not plausible. So starting to look for outlying factors between all of these blank checks that seem to coincide with their announcements. Things that indicated potentially mergers on the edge of being announced. And so started to create a system to index all of the warrants in the SPAC space. And I say in the SPAC space, and the reason I say that is because most of the other warrants, for people that don't know, they're far more reliant on the exercise price. They're far more reliant on the expiration date. You do have a lot of scenarios where warrants are issued, whether it be part of a pharmaceutical research and development plan, a biotechnology research and development, or a mining drill program. They're going to issue a warrant. They're going to drum up some money with the hopes that that program of whatever variety, bears fruit. And that's the whole idea. So in most aspects outside of the SPACs, you have to pay a lot more attention, and the warrants carry I'm going to say a significantly higher risk reward ratio. Not to say that that's a negative, just something that the average investor should be aware of. When it comes to the SPACs, we see a much more uniform environment carried across a great deal of them, hundreds, that they could actually be pegged to some of their technical markers. And that's why I specifically focused on the SPACs. They're a purely speculative environment at the pre-DA phase. That's mainly our focus is in that pre-DA phase. It does not mean that's the only focus, but within SPACs, you've got several aspects of that trade. And so as it pertains to warrants, it really depends on which leg of the trade that you're playing that really carries the most importance as to how we view our strategies at the time. Again, getting back to the background. So I created the index for the purpose of targeting. That was the whole purpose. How do we target these guys? There's too many. We know there's lots of opportunities. And so that's where I ended up coming into purely a SPAC warrant persona on Twitter for this purpose, for tracking SPACs. I saw a lot of similarities to the bubble environment of the .coms. I'm not of the opinion that all bubbles are bad. So I personally saw this as a speculative environment that truly could be capitalized on if you could find the right entry points. And so with that being said, I mean, I'd say that's where a lot of the background comes from. I come by it very honestly. I'm a realist. So where most people are looking for things to go to $100 or CCIV to 80, I'm exiting with my 1,000% gains and smiling the whole way. And not feeling like I missed out on that last little bit. You'll never exit at the peak, and you'll never buy at the bottom. We'd all like to every time, but that's just not the name of the game, unfortunately.
Awesome. So Jeff, you mentioned the high risk, high reward, right? Which is something, I always use to kind of describe warrants here. Before we get into the reward and some past winners, can you just talk a little bit about some of the risk with warrants and, can warrants, trade down to zero? Can you have a complete loss on these, to give our viewers, some more background on the risk here?
No, great question. And yes, you absolutely can. It is a riskier play. Let's be honest, everybody, and I would say the vast majority of your viewers are pretty savvy individuals that have watched y'all quite a few times. So most people are pretty aware. The SPACs are a speculative asset class as it is. The warrants are a leverage vehicle on that speculative asset. So they're a leverage vehicle on the common share. If the common share goes up, guess what happens to the warrant? It's leveraged. It goes up more. If it goes down, well, guess what? You get a haircut. That's just how that works. If you run into a deadline, if they cannot complete the transaction, if they dissolve or liquidate that SPAC, well, you wake up with the goose egg in your portfolio. That's just the reality. There is no one to send a message to. That money's gone. So yes, you absolutely have a risk at play there. I would say that risk is somewhat diminished And I'd say that it's diminished greatly in the SPAC environment because, and I issue that caveat, the big because these are, in most cases, they're pre-DA. Even in the events where they've had a definitive agreement, you've got years of life on a lot of these. A lot of these guys that are that were issued last year in the bonanza, well, we don't really even have any jeopardy on their expiration for another 12, 18 months. So for us, that's not really a major concern right now. The ones that bring concern are things that are approaching a deadline, lack of information. Let's say the GRNV, that was a great example. The LATN, that was a great example. We've had several that reached their deadline, no real news about what's happening, and in that event, that's a gamble. That's no longer an investment. You are rolling the dice, and so that's how I genuinely approach those situations. Is those are gambles for me. If they're reaching a deadline, that is something that we do carry a large inherent risk. And while we have not had a liquidation recently, we know that they can occur. We know we're probably long overdue for one or two, to be quite frank. If we have major economic cycles outside of the SPACs that affect the broader markets, we absolutely can see some drastic downside pressure, as you witnessed in March of last year, when you saw warrants trading down all the way to 5 cents. I believe OPES was 5 cents at one point, which turned into BurgerFi. So, I mean, that's one of the biggest gainers on record. So if you recognize that as an undervalued warrant that was depressed through that time, but still had an incredible time horizon left on the expiration, well, that thing ended up being a 5 cent to $5 warrant. So it really, we look for every single warrant we touch is a double, or I don't touch it. That's just the reality. Everything we're touching is intended to be a double. We would love to see, everything be a 10 bagger. Obviously, those are the lofty goals. So for the most part, we are looking for a double on pre-DAs. And then as you leave the leg of the trade that's in the pre-DA phase, well, now you're into we just announced a deal. What is your speculation? And then subsequently, we're running up to the vote on that deal. What's your speculation? And then subsequently, now we're de-SPACing. What's your speculation? Well, each one of those legs carries an entirely different trading strategy. There's really no two ways around it. You really do have to reinterpret your entry points, your risk reward. How far could it go up? Could it collapse entirely? We've got examples of old SPACs that are not pretty by any stretch of the imagination. I believe Yatra Online probably holds the key for that one. It might be trading at a penny or two right now. And that's an old SPAC. So you do have ones that you have to pay attention to. I know that there's a lot of dynamics at play. So most of the specifics I give on companies, I'd like to keep that to a relatively current environment, say Twitter. Or we date this video within seconds. And that's just the reality, because a warrant that looks good today, it really might not look good next week, because we're talking about the entry price. We're talking about when is it the most opportune to get in that we can see the leverage really magnified in that run up, in any run up, to be quite frank. And in the case with all warrants, we're looking at the common share. Do you like what the company is going to do? And if you like what the company is going to do, well, the warrant is your leverage vehicle on that. So yes, we have higher risk in the SPACs. I'd say that risk is diminished significantly as long as there is a reasonable time horizon in the future, and as long as you are not buying it at an overvalued price. Now, that is really key on a pre-DA. I'll just to throw one out there from the past that I know is one that everybody knows, the CCIV. When that came up on my radar, I couldn't have told you who Michael Klein was. Honestly, didn't care. The reality was they had a lot of money in the kitty. If I looked at Michael Klein's history, I'm looking at what? You've been talking with DirecTV, you've been talking with Multiplan. Both those look horrible to me. So, why would I possibly think that this is a sexy deal? Well, On the statistical side, you got $1.8 million or $1.8 billion. I'm sorry. And genuinely, your warrant is incredibly undervalued. That was my determining factor in getting in it. We had reached a bottom that should not have existed. It made sense. At that point, I opened up the management. At that point, not before, because if you do that on 900 companies, let me tell you how long the fundamental analysis on 900 previous management teams' success and failure rate is. You're talking months of analysis for any sort of competent understanding. And that's just not realistic. So you have to find the outliers and then follow through with the subsequent analysis on the fundamentals of what they've done, where they're going, what's the potential. But when you're looking at it from a statistical perspective, you're bringing the outliers to the surface. And then you're looking at the management teams. Which ones of these outliers have a competent management team that I like? That's how I approach that normally.
Perfect. So, one of the things we're seeing lately is, SPAC warrants, really getting hot again. There seems to be a lot of interest in, especially pre-deal warrants trading below $1. Is that a trend you see continuing? And, who are some potential, SPAC warrants that maybe still are headed for a pop here?
Well, I think they're all headed for a pop, if you really want to know the truth. I want to say that when we called this out, along with Julian Julian over at Accelerate, we both seem to be in tandem on a lot of this. I know he looks at this from the unit side. We look at this from the warrant side exclusively. So we genuinely carried a lot of the same sentiment when it came to the bottom being in place around March 24th. That's kind of when we started to see the bleeding. I'm not going to say stop, but diminish significantly. The percentage loss on a given day had diminished to, a percent maybe, versus some of the ugly days, which, let's make no mistake, anybody holding warrants or a full warrant portfolio, you know that from February 22nd to March 24th, if you didn't see a 50% haircut, I'd argue you probably weren't holding a full warrant portfolio. That's just what happened. And that's the nature of it. But it wasn't because of the warrants. And I guess that's the key. It was because of the common shares. The SPACs lost interest. Again, the warrants are merely a leverage vehicle on the SPAC. So if the SPAC has no interest, well, the warrants absolutely have no interest. Because why you want to get a leverage vehicle in something that has no interest? So couple that with the SEC, guidance by blog, which I don't even know who the hell thought that was a good plan, but so they throw out this guidance. Oh, well, we think it should be done this way. It benefits zero investors at the end of the day, adds a footnote to filing, which, maybe there's some relevancy there. But I want to say most of those dilutive characteristics of the warrant are fully disclosed on page 1 of the S1 or the 424. They're right there in your face. So they need a footnote to explain what you're already seeing explained. That's great. Fabulous. So for us, that was a non-issue, but for the broader markets and for the media, that was a something they could sink their teeth into. Let's just beat SPACs up more here. Let's use this as something that we can make it uglier. Well, to us, we knew that nothing was going to come out of that, so we saw it as more buying opportunities. Retail market gets a little more distressed, and everybody starts running away from warrants. The ones that don't understand what they're holding. They just bought warrants because somebody told them, hey, buy this warrant. If you know what a warrant is, you're no longer thinking about what anybody else is telling you to do. You're looking at it like, well, I love this company. And this warrant has more leverage potential. Which do you buy? Because I'll tell anyone watching, frankly, right now, if you pull up a chart on any single one of these companies, the movement's in the warrant. Period. End of story. You're going to find very few examples that would contradict what I just said. You will find your percentage gains in the warrants. And so that's for us. I mean, a lot of this SEC stuff, it's been, it just seems kind of counterproductive that didn't accomplish anything. It led to a backlog of everyone needing to restate their filings. So now you got 900 plus companies. Everything that's de-SPAC to end is still preparing to. Everybody's got to refile. Well, how many employees do you think the SEC's got? So, I mean, this is just a matter of time management at this point. These guys, there's no way around having a couple months of having to catch back up. Well, look at the calendar. A couple months later, here we are. Everything's heating back up. So it's heating back up because the backlog's starting to dwindle. But again, it's not warrant specific in that regard as to why are warrants heating back up. SPACs are heating back up. The leverage vehicle on those SPACs is just by pure association is also going to heat back up, which also brings us to a couple other factors that some people use for their technical analysis or looking at these warrants. And when you look at the average volume or things of that nature, I must caution that the average volume of a warrant from a month ago means nothing, because everybody's average volume was nothing. You have to compare to benchmark time periods that were relevant, not in the depressed cycle where nothing was moving at all, nothing was trading at all. It doesn't actually provide you any sort of true fundamental or technical detail that you can sink your teeth into. And sometimes we'll give you a lot of false flags. And so that's a real caveat with the warrants here. And I'm sure every leg of this trade, whether it be the unit arbitrage, the common, the warrant, or the right, each one of them carries an opportunity cost. How long are you going to be in there? So does it matter if you make 100% if it takes you 5 years to get there? Well, yeah, it matters. It matters a lot. Does 20% really mean something if it took you 6 months to get it? Well, yeah, it matters. It matters a lot. So we're looking at what's got interest now. What's going. And again, this is after I typically index them, say, okay, so what are the undervalued warrants? What's got some volume inflows? And that's really where you have to start looking at these from multiple characteristics based around your own investment strategies. So it really doesn't matter what, say, Jeff is investing in today, because if it doesn't align with your strategy and your current holdings, well, it might not do you any good. The concept with us is warrants in general. They are a much better leveraged vehicle for the most part in this environment with less specificity required as, say, options. And that's the other next leg of risk. And that is where you see probably the most risk is in the option plays, because now you've got to peg a date. You got to peg a price. Is it a call? Is it a put? With warrants, we've got years. So if something goes awry, it's not necessarily that you want years on these warrants. That's not necessarily what you want. You don't want to ride through this thing for 5 years. You want the ability to not lose your capital. And so that 5-year expiration gives you a hell of a long time to play the game in the event that something goes awry. You don't want it to, but if it does, that's our protective and defensive measure, is that we've got a longer term expiration.
So Jeff, one question I have, is a lot of times with these warrants, we see these big, 50%, 100% jumps, on rumors, on deal announcements, on big news. If people aren't, active traders, I guess the first question is to be heavy in SPAC warrants, do you need to be a more active trader? And if you're not, what are some ways you can, protect yourself or profit from some of these big moves?
Oh, great question. I think the scaling out ideology is pretty important. And in the concept of scaling out, we have quite a few subscribers that, whether it be their day job, other live, things going on. Most of us are pretty busy. So if I take a vacation or something of the sort, I have a scaled out sell order sitting on the books so that I can capture those pre-market moves. I almost always trigger them for pre-market and have them set at a double and then a little more, and then at a 300%, maybe a full exit. And again, that's if I'm not watching. So there are ways to circumvent the requirement to be staring at your screen every morning at 5, 6 a.m. Waiting for any merger announcement. That is one of the best strategies to play. That is to set some scaling out mechanisms to be able to capture those when you're not watching. That being said, again, with every leg of the trade being slightly different, I'm going to say that the requirement to be as focused, it diminishes greatly once the definitive agreement's announced. At that point, you've got a little more flexible time horizon. I'm going to say that waking up at 5 a.m. is no longer required for those holdings. It is really the pre-DA phase where we see I'm going to say a borderline swing/day trading mentality that has to at least be present, even if it's not exercised regularly. You have to be aware that the announcement of something can cause a move that you might not otherwise get a gain that large, and so you have to take those opportunities to exit the party. The reason I say that, it's not that there's not some that you stay in. I'm still in sports entertainment right now, the SEAH. I know you had those guys on yesterday. I like that warrant. I'm in that warrant cheap, almost down to $1 at some points. And so in those cases, I held that warrant through the whole thing, but I loved the announcement. And so that makes the difference. If you love the announcement, well, you're in a great play, no reason to leave. The risk you run is that statistically we have a pretty good portion, I'm going to say the vast majority, that do follow the retracement of that price from the peak after the announcement. Whether that comes within days or weeks, we normally see it retreat, at which point we can find better entry points leading up to the vote. So that's how we approach that. Is that once the pre-DA phase is the most attentive you have to be. Once they've announced, you've got a period that is going to be a couple months on average before you get a run up to the vote. The run up to the vote is also a pretty attentive period because it's a shorter trade. It's probably normally from the time they announce that a meeting's coming to either the day of or the day after the combination. And then the last leg of the trade where it's de-SPACed. I mean, welcome back to investing in any other company on the planet. Now you're into a purely fundamental discussion. There are details that you can sink your teeth into, but that is a longer term play, in our opinion. So I mean, it does depend on the leg of the trade you're in. And at the end of the day, I think our biggest caution is that buying expensive or overvalued pre-DA warrants is about as risky as you can get. Regardless of the management team, regardless of anything else, if it is overpriced, then questions have to be asked. And I would say I know that's probably one that you're chomping at the bit to ask about with the SRNG, Chris, because I know you probably own that one as well. I know a lot of people send me messages about that one. I own some options on that one. I did have some caution for people on that one when the unit split and that warrant was sitting around $3. That to me sounded overvalued from the get-go. And not to say that one stands out by itself. Pershing never touched it. The warrant was too expensive. It's just end of the day, there were hundreds of other options. Why in the world am I going to pick these ones that are expensive? I don't care if they nail the best deal on the planet. If the warrant's super expensive, my leverage on that's not going to be jack. So I'm not going to see the pop in my portfolio. So that's what I'm looking for, is what's going to offer me the biggest percentage gain from a pragmatic perspective. And so I don't choose the expensive ones. It does not mean that there's not a few that are not going to be runners, because there absolutely are. CCIV is a great example right now. It's an expensive warrant. It's still got some sexy upside potential. That is what it is. Do I want to go and buy the warrant right now? Hell, as the warrant guy, I got to tell you, I opened up the option chain. I needed to see something that was not at $7 to $10, because at that point, what most people do not understand about the warrants is once you've got that common share trading at 1150 and above, well, now you're in the money. We're already sitting on exercise, and so you really are dealing with a 1-to-1 leverage ratio as that moves up. So it does not mean that the play is bad or has no validity, because you truly are dealing with a less capital intensive play to get the same money. So you're putting, in most cases, a portion of the money on the line to receive the same dollar for dollar increase you're going to see as these companies grow. And there is a very valid argument for that being the sole reason to be in the warrant sometimes. But for me personally, in that scenario, I looked at it from a percentage gain perspective and moved it into the option category at that point. But you do have to be able to peg the month, the price you're thinking it's going to hit. There are more details there. And newsflash, if it doesn't get there, you got a big goose egg. That's just what happens. You lost your money. With a warrant, it doesn't get there. Well, you got years left. What do you think is going to happen?
Perfect, Jeff. I want to get to a couple more I have, and then we've got a ton of questions in the chat. The chat really loving, this talk. You've done a great job, explaining some of this. Yeah, SRNG, I own the units, and we've seen the warrants go over $3 now. Can you talk a little bit about when companies call the warrants, after the merger? What are some signs to look for this, and maybe some ways to play this as a trade?
Okay. Well, with us, we look at the dilution potential that was originally offered in the unit. So let's say they're going to give you a half warrant in the unit, but let's go further and say that warrant's only a 2-to-1 warrant. So you might as well look at that like you got a quarter of a warrant, because that's really what the math ends up working out as. So you got a quarter warrant. Let's say it's on 20 million units. Well, you're talking, 5 million extra shares can be allocated just off of that. So you have to look at the dilution potential to see truly how much of an impact it's going to have when they actually redeem those warrants, when they call them in. From the perspective of the company, this is a normal function. It is I'm going to say borderline defensive to end the party. For all of us warrant holders, there's a point where they say, okay, guys, we gave you a kicker. You're going to make some extra money. If we achieve our goals, you're going to make a ton, but there is a point we have to stop the party. And that's just the reality. There is a point where we have made too much money and the company needs to call it off. That is why they have those redemption prices at 18, and some of them are even throwing them in there at 10. Well, if that common hits $18, I just got to be frank, most of us have already seen 500 to 1,000% profit. So at that point on the warrant trade, most of us are thrilled. The biggest negatives come from people who miss those redemptions, who forget about them, who leave them to the side or don't get notified, and see that turn into damn near a goose egg. So that's the biggest negative. How we play them, it really does depend on the company. We have taken positions on shorting MP, shorting ChargePoint. I can think of a good dozen that we've shorted leading into that redemption. Now that I'm gonna go ahead and stress that is one of the riskiest trades you can make. Any short is not something to be entered lightly, and if you do not know how to play the game, do not play it. You have a very limited upside. 100% is your max if that thing goes to zero, but your downside is pretty drastic and can go anywhere. And anybody that plays warrants knows that these can be extremely volatile, and a large swing the opposite direction can cost you a hell of a lot of money real fast. So we don't play them casually. We play them very intelligently. If we see the markers set up to where we look like we think that this is going to cause a negative reaction in both the share and the warrant over the subsequent few days, that's when we'll take those positions to try and play them to the downside. Now, I'm very rarely on the downside. I'm much more bullish than that. But in those scenarios, you just can't ignore if something's going to be heavily dilutive, if they've offered 80% of the shares in lieu of kickers, and you're going to have, instead of getting 25% shares allocated through that half warrant at 2-to-1, now all of a sudden you're dealing with there's going to be 100% dilution or 80% dilution. Well, that's a pretty significant event. And rightly so, the common share normally takes it on the chin, which means the warrant does as well. And so that is ways that we've played that, whether it be a put on the common share or whether it be a shorting of the actual warrant, which I know most people are not familiar with, but rarely is it even shown as an option within most brokerages. I know at Interactive Broker, we get no real indication that we're shorting the warrant other than the available outstanding holdings that are able to be shorted. That's how we see the determination between the common and the warrant shorts, is that the warrant short only has, a tenth of the available warrants to short versus the common, but they really don't make it very obvious. I don't know if that's by design or whatnot, but so there are a lot of ways to play that. That being said, the redemption itself is not a negative. For most companies, it is either A, going to drum up a whole lot of money, and that is the purpose of the warrant. We're going to make everybody exercise it and buy shares. So now you're going to have a whole lot of cash coming in the kitty. I believe the most recent one, who was it? Maybe it was Danimer, maybe somebody else, but they brought in $140 million from the forced call. On the cashless side, that says, hey, we don't need any money. We're going to prevent dilution as much as possible, and we're going to exit all these warrant positions, and voila, we have less dilution, but we're not going to give away as much. Doesn't matter if on paper in that original unit offering, we were going to offer 90% of the shares. If we're doing it through a cashless, maybe we only have to dilute by 15, 18, 20%, which is also a positive for the company. In those situations, we don't see the warrant take as much pressure. We don't see the common share take as much pressure. And in the redemption process, we don't feel like those are as shortable or as predictable to go down, because a good company that is preventing further dilution is not necessarily showing the markers of something that's about to collapse. So it really is. I know that's kind of a dancing around the subject answer, but the reality is every warrant is very specific based on the conditions surrounding that company at the time. And the prices involved and how much of a dilution is it. I wish we could put every SPAC in the same umbrella. We can't. It's impossible. You've got too many different share structures, too many different IPO amounts, too many different factors in terms of how much of a kicker they offer, that it does really start to break down into each individual company has something that needs to be analyzed to get a true picture of what could happen.
Yeah, great answer, Jeff. I don't mean to cut you off. Before we let you go, we want to get to a couple questions from the chat here. We've got a bunch.
No, I'm sorry, I'm a talker.
Well, no, everyone's loving the education, but we also have a ton of questions. So, Mitch, you want to grab one of those questions for Jeff here?
Yeah, so we got one from Scott here. Mentioned what are Jeff's favorite warrants today? Biggest upside, at least potential, right?
Well,
I guess you can give us one. How's that?
Well, I mean, so I'll say that when you say what are my favorites today, well, I have 25 favorites. I have 25 favorites every day. Trying to pull it up real quick. No, I have it sitting here somewhere. And that's the purpose. I have 25 every day. I go through those 25 every day. Sorry, I got to reload that page. I know I threw it here somewhere. But I have about 60 windows open, so I could not tell you where it is. So I'm reopening it. Favorite warrants today is always a great question until I've done the analysis of my 25. I'm about to go on vacation, so I can't say that I was preparing for new entries right now. And that's just the reality. That's how we all play it. So I was not looking for new entries after the March collapse. I'm going to say that most of the strategy has been to pursue the averaging process diligently, to actually really take advantage of the new lows we were seeing and trying to lower our cost basis on a lot of warrants that we liked. So that was a big component leading into the last couple months, was how do you defensively play a portfolio that just got kicked in the teeth? And so most of that was handled, I would say, appropriately through the averaging process. And that's because we did see things that were far undervalued, that had just gotten pushed down for no reason. Ones I like right now, that are showing signs of something going on. Now I haven't looked at every one of these charts today, so a few of them might have already run away. But let me just throw some names out there. I still like Puck, P-U-C-K. I like that warrant at 65 cents, 1-to-1. I like it because I'm still seeing the warrant volume sitting there. I think that there's a few of these that you still have some reasonable warrant volume and interest level that's there. I like the team on that one. I think that one could end up doing something great. I think COVA, C-O-V-A, that's Crescent Cove acquisition. That's another one that's interesting. I mean, just yesterday, you only had 30,000 common shares trade, while 250,000 warrants traded. And so just like other services, let's say like Unusual Whales and whatnot, we track the odd movements. We look at individual markers that are odd for that particular warrant. Why do you have 500,000 warrants trading and almost nothing in the common trading? Well, somebody always knows something. I think any of us that watch this game long enough, we know that there's somebody who made an insider transaction somewhere along the way. So that's another one is the COVA. I'd say if I kept going down this list here, I see quite a few that are interesting to say the least. AMAO is one. The African Gold acquisition, I loved it at 43 cents. I know I spit it out there on Twitter. Well, we're already sitting at 64 cents. So, it's debatable. Do you still want to step in at 64 cents? Well, not as much as I wanted to step in at 43. But we're already talking 50% upside since then. So it's all relative on the day that you look as to whether or not the entry price is undervalued and whether or not you think it's still got the upside. Now, in that particular case, sure, I still think we're going to see over $1 on that. I still think we're going to see, all of these warrants that are under $1, with the caveat that 2-to-1 warrants are not always the same beast. Your 1-to-1 warrants that are under $1 for the most part, well, yeah, we should see some pretty significant moves on these guys. Even in the event that the company's awful that they choose, if the warrant is undervalued, the act of completing an agreement that they have even made one, that's the goal. We don't even care if it's with Sally the dog walker. The goal is, did this SPAC accomplish its goal of finding something? The next leg of the trade starts from the minute they announce.
Awesome. Well, Jeff, I think that's going to do it for us. Unfortunately, we're out of time. We might have to have you back on to hit more of these questions. Guys, again, joining us on SPACs Attack today, Jeff Baker. If you don't follow him on Twitter, it's right there on screen, at SPAC Warrants. Please give him a follow. Please like this stream. I know I'll be going back and watching this interview for more education. Jeff, thank you so much for joining us on SPACs Attack today. We look forward to talking to you soon, okay?
Absolutely. Y'all have a great day, great weekend, and I appreciate you guys having me on.
Thank you,
Jeff. Have a great 4th, man.
All right, guys. I know a lot of you in the chat love that. Lots of questions. Unfortunately, we didn't get to them all today. We'll try to bring Jeff back on. It looks like everyone wants him to come back. Some more questions. Mitch, real quick before we end the stream, wondering if you can pull up RIDE, Ride, Lordstown Motors. I'm seeing news. Shares down 9%. It looks like a Department of Justice possible investigation into the stock. Look at that drop. What do you think, RIDE here?
Burn, let it burn. Disco Inferno, burn, let it burn. Disco Inferno.
This company has just been a magnet to bad news, right? And just when you think it's getting better, maybe they're going to get a buyout, maybe they're going to get some financing. Now you have this as a major concern. So, oh man, what a day Ride maybe having today. So, but that's going to do it for SPACs Attack today. No show on Monday. Markets are closed. Everyone have a great weekend. Enjoy your holiday. Stay tuned for Power Hour coming up next. Thanks, everyone.
Definitely. Happy 4th to everybody. We'll see you next time. Coming up next, you got the Power Hour. Definitely, guys, check it out. If you guys haven't seen it before, this is where the hype meets the stocks. So definitely check out the Power Hour, guys. All right, let me go ahead and make sure that we got that redirect set 100%. I know the stream was made a little late today, so just making sure we got it set. There you go.